Hey everyone, I hope you're having an absolutely incredible week. I just wanted to jump on real quick and do a breakdown of my EURUSD long from Bank Holiday Monday. So I hope you enjoy it. Please feel free to reach out in the questions channel if you do have any questions or queries. But I know that many of you have been asking me to drop a video on this following the breakdown I put within the community on Tuesday. So yeah, hope you really enjoy it and look forward to receiving all of your kind words, comments and questions. Starting on the daily time frame, you can quite clearly see that we're in a bullish market. The market's making higher highs and higher lows. So expectation order flow after printing this higher low is for us to actually go and print a higher high. Now, one thing you will notice, or will begin to notice as you develop within your trading journey from an experience standpoint, is legs. Now, what I mean by that in terms of the actual structure that we're seeing, you'll notice that early on in the bullish momentum, we get nice long legs, then we get some correction phases or reaccumulation periods, and we get another leg to the upside. As we kind of extend into the move, if there is exhaustion creeping into the market, you will notice that the legs get smaller and the sells and the actual liquidity coming into the market, so from a supply side, start to become more aggressive. But nevertheless, we are bullish, we are pro trend. So at this moment in time, just based on the 4-hour directional bias, we're looking for a new higher high to be printed, but we are going to be and remain aware of reaction periods and reaction areas from a higher time frame supply side, so potentially where shorts could kick in. So overall, what we're looking at: bullish daily, expectation order flows for a new higher high. For those of you that are struggling to understand structure, I don't necessarily encourage this, but in my opinion, early on in your kind of learning phases and early on in your journey, if you're really and truly struggling to identify whether the market is trending bullish or whether the market is trending bearish, there's a couple of things you can do that just help your eyes to align with what's going on. One of them was dropped in Alex Tricky's video earlier in the week, which is an exceptional video, in my opinion, for the more advanced or more experienced traders in the community. Don't necessarily dive right into that because it is advanced. Obviously, it looks at supply and demand failures rather than traditional supply, demand, areas of interest in their natural form based on Phantom's methodology. But if you are available and if you are ready to dive into the kind of more advanced theories, definitely check his video out. But the two things you can do, and just to kind of touch upon them whilst we have them, is just based on this leg, we're looking at, of course, price creating higher highs and higher lows. And as you can see, we're doing that. So expectation order flow deems that we are now looking for prices to come back to the upside and, of course, make a new higher high. Then, of course, print a higher low and continue again to the upside. So the market moves, of course, in ebbs and flows, as you can see quite, frankly in front of me. The other way that you could look at utilizing is traditional kind of equidistant trend lines, or placing of equidistant ascending channels, or maybe even ascending bullish wedges in terms of a bullish market. But you can quite clearly see, just by drawing on and plotting on these two equidistant trend lines, is that we are bullish. Now, I appreciate it's quite layman's and it's quite new. But for those of you that are new to the community and struggling to identify structure, it's just a little tip to help you to see where price is traveling without over-analyzing something and getting caught up in the noise. Because when you drift from higher time frame down into lower time frame, it can get a little bit confusing. So just by plotting on those two equidistant trend lines, it's going to give you a clear sight. You know where we're expecting to head, but we also appreciate and understand that the market could break down at any point in time, and of course we could see a change of character. So we've just done the daily. Let's dive down into the 4-hour to see where price is, obviously on the medium term time frames, to actually understand what's going on. So price again is continuing to create higher highs and higher lows on the sub-trends inside the overall daily time frame bullish leg that we've got. Now, for me, just again plotting these on for you guys that need it. You know, we've got this nice bullish ascending trend line. Expectations are for a third touch. What do we get? We get a sweep of liquidity to the downside. Now, one thing to note is after this sweep of liquidity that took out all of this liquidity here, all of this liquidity here, these equal lows. And there are some equal lows in here, which we'll touch upon in a minute. Price immediately reversed. We had that nice bearish engulfing candle, decent momentum, and it would have induced a lot of sellers into the market, and it would have taken a lot of executions into the market as well that would have been triggered, all of the orders that would have been triggered looking to short this move once price had actually broken to the downside. Now, some would have been patient looking for a traditional break and retest continuation, but the majority would be looking for an immediate execution on the break of this trend line, which would have been realistically execute at market at one spot 21.70 spot 9 kind of thing, you know. So a lot of orders would have been triggered, a lot of longs would have been stopped out, because if they were long from here, they would have been trailing their stops within this ascending trend line just below. But of course, that nice sweep of liquidity would have taken out all of that liquidity and all of the liquidity that was built up on the move to the upside. As I mentioned, price previously reversed. Now we've got this beautiful bullish engulfing Marabuso candle that completely engulfed a lot of that selling pressure that was to the downside in that previous 4-hour candle. So what can we tell? Just to clarify, we're still bullish. Price is still going on to make higher highs and higher lows. Higher high, higher low, higher high, higher low, higher high. And what we've done continuously is break structure to the upside. Now the interesting thing as well is when we did sweep that liquidity, yes, we can potentially start looking for shorts, but ideally we want to see a successful retrace and then another break of structure. So ideally, if I'm now looking for a change of character, or I'm now looking to go short in fiber, I then want price to, once it's broke structure to the downside once, I would like to see a successful retrace to mitigate as much liquidity as we possibly can. Let's say in this area of interest up here where supply side liquidity sits, I'd have then liked the price to break structure again to the downside, so a double boss confirmation. Now I'm primed for shorts. Okay, so I'm not necessarily looking for shorts just yet, but I do and am bearing it in mind that we are starting to see shifts in momentum. We're starting to see signs of weakness drift into that market, so that it does mean that potentially that bullish momentum is starting to wane, and of course we're getting sellers kicking into the market and a lot more bearish pressure. So just to recap, 4-hour is still bullish, making higher highs and higher lows. So of course, on an expectation order flow standpoint, we are going to be looking for continuations to the upside as we still remain in that bullish ascending trend. One thing to note, there is a sign of weakness, so we just need to bear that in mind when taking any positions going forward, unless we get a nice element of confirmation. So let's drift down into the 15-minute, and let's just pull price back to here. So on the higher time frame, you could see that this was a sweep of liquidity. We've had a nice grab of liquidity to the downside, taking out all of these equal lows and all of that liquidity that was built on the way up. Now, after a sweep of liquidity, what do we want to be doing ideally? We want to be trading in line with that sweep. So we've had a sweep of liquidity to the downside. So realistically, we want to be trading long, okay? Now, after this bullish pressure, we've seen obviously the markets are now drifting into a reaccumulation, which is also known as a sideways distribution or a ranging market. So let's play price forward a little bit, and you'll see that we just create a nice range. Now, when price started to create this complex pullback, we wasn't to expect or wasn't to know that we were going to be creating a reaccumulation nor a range. Okay, same thing. We were just looking to identify what was happening in the market. Now, when you can see that we've got in the premium these inside bars, and price is just coming down, tapping into them, and then we've got some supply side liquidity up here that's got a nice area of inducement. You can see that we've got inducement here. So just dropping liquidity, we broke structure to the downside, and this is only minor structure. We just got a nice minor structure break, so let me just mark that up for you. Nice minor breaker structure to the downside, and then what have we done? We've pulled back and tapped into liquidity. One thing to note with ranges is we never want to be getting involved in the EQ of a range, i.e. we don't want to be trading in the middle. Never diddle in the middle is a comment that we made early on within this community, for those of you that are aware. So ideally you don't want to be getting involved in the following areas. You're not going to be looking for longs in here, and you're not going to be looking for trades above here, okay, initially, unless you're looking to go short. Okay, so if we're looking to go short, then you want to be trading at the extremities of the range. So let's just touch upon that very quickly. In terms of a range, you never want to be getting involved in the middle of a range, but you want to be trading the extremities of that range. So once we've identified that this is actually moving into a range bound market, we only want to be trading shorts from up here and longs from down here. Okay, make sense? Now, price immediately reacted to this supply side liquidity, and then let's just kind of see where it went from here. So what did it do? It messed around, pulled back, broke minor structure here, or substructure. We then swept all of that liquidity that was dropped, tapping into this area of interest here, or this inside bar, but we didn't meet EQ of inside bar. That was one thing that I wasn't entirely confident on with this trade, because it hadn't been mitigated. We literally just tapped into the proximal of the inside bar. But one thing to note, if we do look at the overall leg, it was of course in the premium of the leg. So this trade was probably a B valid setup, not an A setup, because it still was in the premium of this leg. However, we was in the discount of the range that had been created. So if I just move down into the 1 minute time frame, just to get obviously a bit more granular, price pushed to the upside. We had some supply side failures, you can see here. We then went on to the upside and we created the break of structure here. Still emboss, you know, it's nothing too specific. We had another break of structure here, and on the way up we've got some successful retraces and then additional breaks of structure to the upside as well. So let's just play price forward a little bit more, and then you can see again we've broken substructure. Let's put that at the top, it's a little bit clearer. So for me, we're now prime to be looking for longs. Okay, so we've got change of character, we've got intent, we've built liquidity in multiple ways. So we've built liquidity here, and we're also building trendline liquidity all the way up as well, because we're getting quite corrective complex moves to the upside. Not much momentum, not much conviction. So let's play price forward, and we just continue to break substructure to the upside, again dropping more liquidity to sweep. Play price forward, again dropping liquidity, taking liquidity, trying to attempt to push to the upside but getting a failure to break, pretty much drifting around, sweeping liquidity, dropping further liquidity. So here we swept that liquidity that was dropped here. Now just before we actually execute, I set a buy limit on this trade at around 7:30 AM UK BST. I shortly after actually left the screens for the day, so I wasn't even aware that I got tagged into this trade until I got home later that evening at 6:45, and again 6:45 UK BST. I didn't have access to Meta on my phone, nor did I want to get access to it. I just wanted to be out for the day, as it was Bank Holiday Monday. And of course, we also had, I think it was US Memorial Day as well. So, buy limit set, 20 tick stop, so 2 pips on the stop. And you'll see that price taps into the pip, literally 0 drawdown on execution. And then we drifted around for a little bit once price had obviously executed me in. And bearing in mind, I didn't know I was tagged into this trade. I actually thought it missed me by spot 002. But it didn't, which is incredible. So 0 drawdown on the trade, came back to test it, obviously failed to break these highs. We then started to kind of push to the upside, and then really momentum started to kick in shortly after this kind of phase of messing around. But you can see we've broke structure to the upside, and let's just play price forward now. Now again, I got in at about 6:45 UK BST, and I actually closed this trade at 18:51 UK BST. Full R on the trade, no partials taken. Stop wasn't moved to break even. Now in terms of my overall profit target, I was looking to attack that swing high. Of course, we're expecting price to obviously tap into expectation order flow and create a higher high. This trade was textbook. Traditional phantom methodology, core concepts. In terms of the rules, obviously it was higher time frame, expectation order flow, bullish continuation, expectancy of a higher high to be printed. We had a sweep of liquidity, we had inducement, we had further liquidity being built and swept on both sides of the market. We had multiple breaks of structure on the 1 minute time frame. And of course I set a buy limit. Now in terms of rules, there wasn't a higher time frame 4-hour area of demand that it tapped into, but it was in line with the Asia continuation and of course overall expectancy of the trade. So if we just kind of drift back a little bit, we had the Asia session earlier that day. We swept that liquidity from obviously the Asia that was being built up. So all of this liquidity here, liquidity that was dropped here. Price obviously opened at down at what, 121.80, so we swept all the liquidity and then pretty much created inducement up and around the London low at 11:15, and then of course we pushed to the upside. This was the only trade I took during that day. As I mentioned, I wasn't in front of my screens for Bank Holiday Monday. Had I have known I was executed into this trade, I probably would have been taking partials on the way up. Even though it is pro trend, it's in line with expectation order flow. I would have just been looking to maybe take 25% off, so a quarter of the trade off as we moved up. But overall, 21.1R, really solid trade, textbook in terms of phantom methodology. So of course, higher time frame expectation order flow, bullish continuation, bullish expectancy for of course higher highs to be printed. Nice sweep of liquidity. Liquidity was built, liquidity was swept. We induced buyers and sellers into the market. We tapped into our area of interest, which was the reaction of the sweep, and of course we went to the moon from there. So I really hope you've enjoyed the trade breakdown. If you do have any questions or queries, please feel free to reach out within the questions channel. I know that many of you have already seen this trade breakdown in team trades within the Discord community, but I know many of you wanted to see this trade broken down in video format as well. So I hope you've enjoyed the breakdown. I hope it's been clear and concise, and I hope it's given you the confidence to continue to go and smash the markets. Have a lovely afternoon. Enjoy the rest of the trading week, but just remember, it's non-farm payrolls tomorrow, so please be careful.